Alright, welcome back to another video, but now on how to secure yourself financially, especially making a quick recap of this beginner guide to financial statement. Okay, so I'm going to jump straight forward to the cash flow statement, a report that show the company's inflow and outflow of cash. And this is very important because company needs to have on hand cash to pay for to pay this expense or purchase assets. While the income statement show you or can tell you whether a company made a profit, a cash flow statement can tell you whether a company generate cash. And this is something done over a period of time. Okay, so the cash flow statement show change over time rather than absolute dollar amount, and it reuse all of the information from, or at least reuse uh, information from the company income statement and balance sheet. So the bottom line of this cash flow statement is the net increase or decrease in cash for that period. And generally, cash flow can be divided into three types. And each type or each part review the cash flow from these three type of activities: operating, financing, and operating, investing, and financing. Okay, so operating activities is the first part of any cash flow statement. So if you look here at the Coca-Cola cash flow statement, it's the first part of the cash flow statement here. Okay, so the cash flow statement is the first part of in goal. All right. U.S. market closed in 2 hours and 32 minutes. Really? Okay. Crude oil, Russell, Nasdaq, Dow Jones, Standard and Poor. Interesting. Energy sector market. Utilities, real estate, healthcare, consumers, staple, information technology, communication service, consumer discretionary, industrials, materials. Australia to acquire nuclear sub under AUKUS Pact. What the hell? Okay, again, go back here to the cash flow statement. Okay, so the first part of the cash flow statement analyze the net income from a the net income from a company and reconciliate with the cash it used or reconciliate with the cash the company received or used in its operating activities. So just to recap this, okay? So the operating activities, the operating activities, or operating cash flow, is the first part of the cash flow statement that analyzes the net income from the income statement, and it reconciliate that with the cash flow a company receive or use in operating activities. And to do this, it yeah, and to do this, okay, it adjusts, and to do this, it adjusts the net income for any non-cash items that affect the state of that affect the income statement, but there is no cash involved. And so, for example, of non-cash items are stock-based compensation, so awards for employees, or the company now issues stock auctions. Okay, they have value, but there is non-cash transfer. Okay, there is no cash transaction or depreciation and amortization. So this is an example of these non-cash items. Okay, that to do this operating income, or to do this operating cash flow statement, is by analyzing is the net income from the from the is analyzing the net income from the interest statement, or Jesus is analyzing the net income from the income statements and reconciliate with the cash, or to the actual cash a company receive or using it is operating activities. And to do this, it adjusts the net income with any non-cash items, meaning or for any non-cash items, which are items that affect the income statement, but there is no any cash transaction. So, for example, well, stock-based options, amortization and depreciation. Okay, and adjust for any cash that was used or provided by other operating assets and liabilities, or provide by that. Okay, or adjust for any cash that was used or provided by other operating assets or liabilities. Again, operating assets, example of this. Okay, so cash flow from continuous operations, net income from continuous operation. Okay, after all, the income statement, which is kind of like this, the income statement, or the net, yeah, they don't tell you this, net income from continuous operation. Okay, and the operating cash flow, and here you have is the net income from continuous operation, operating gain losses, net foreign currency exchange, any losses from equity, depreciation and amortization, and deferred tax. stock-based compensations, other non-cash items, change in working capital, change in receivables, change in account receivables, change in inventory, change in prepaid assets, change in payable accrued expense, change in other current liabilities. So the TLDR for the operating cash flow, okay, in the cash flow statement, okay. Mm, 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 mm. Mm, 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 mm. Mm, mm, mm. So the first, okay. So the cash flow is a report. So the cash flow report inc. So the cash flow report company inflow and outflow of cash, and this is important because company needs to have on hand cash to pay this expense or purchase assets. So while the income statement show how much, while the income statements can tell you whether a company made a profit, a cash flow can tell you whether the company generate cash. And this is done, this is done on over time, okay? Because cash flow statements show change over time rather than absolute dollar amount at a point in time. So it shows you change over time rather than absolute amount of dollar point in time. It changes over time. They change over time. Mm-hmm. And it reuse income statements, and it reuse the company income statements and balance sheets. So the bottom line of the cash flow show the net income or the net increase or decrease of cash flow. And they typically are divided in three main parts. And each part review the cash flow from three type of activities: operating, investing, and financing. Mm, 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 mm. Free cash flow. So a lot of these companies lost or invest large amount of cash, large amount of cash. In 2022 wasn't a great year, by the way. You know, 2022 wasn't a great year, by the way. Mm, 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 mm. Celsius. Mhm. So the first part of the cash flow statement is the operating cash flow, that it analyzes the net income from the net income from the income statement and reconciliate with the cash or the actual cash that a company receive from or use in its operating activities. And to do this, it adjusts the net income to any non-cash item items that affect the income statements. But they're not involved any cash transaction, such as stock-based auction, for example here, depreciation and amortization, stock-based compensation, okay, the amount of wear and tear of certain assets, stock-based compensations, awards to employees, or you can issue stock auctions to generate some cash from that. And adjust any cash that was used, and adjust any cash that was used or provided by operating assets and liabilities. And adjust any cash that was used. And adjust any cash that was used on operating. And adjust any cash that was used or provide. And adjust any cash that was used or provide. Any cash that was used or provide. Any cash that was used or provide. Okay. And it adjusts any cash that was used or provide in its operating activities by other, exactly, is this, or any cash that was used or provide by other operating assets and liabilities. When they mean use or provide, cash that was used or provide by any other operating assets or liabilities. Okay. So things started to make sense, a little bit more sense of this. Please provide me example of this. ChatGPT, man, ChatGPT. Accounting allowance. The net cash flow from operating activities is adjusted for any cash that was used or provided by operating assets and liabilities. And these adjustments are made to account for changes in working capital that may have affected the company cash flow. So working capital refers to the company current assets such as cash, accounts receivable, and inventory. And current liabilities such as account payables and accrued expense that are used in its day-to-day activities, in its day-to-day operations. Changes in working capital can affect a company cash flow. Example of adjustment made for changes in operating assets and liability include account receivable. If a company accounts receivable increase during the period, this means account receivable. If the company accounts receivable increased during the period, this means that less cash was collected from customers that was recognized as revenue. Accounts receivable. Conversely, if account receivable decrease, account receivable. This means that more cash was collected than was recognized as revenue, resulting in a provision cash inventory. So when they mean here, so when the SEC, whoever wrote this, okay, whoever provided this text, when they talk about operating activities, okay, the first part of the cash flow statement from, the first part of cash flow statement from net income, operating cash flow. The first part, this is the first part of the cash flow statement that analyzes the company net income from income statements and for income statements and the cash, the actual cash, and reconciliate, because that's what it is. So this operating activities, this is the first part of the financial cash flow statement. So the operating activities, okay, this is the first part of the cash flow statement, and is analyze the company net earnings from the income statements and conciliate with the actual cash a company receive or using in its operation, in its operating activities. Okay, so this is it analyze and then reconciliate that. Okay. So that's what it does, is operating activities, right? It analyzes the net incomes from the income statements and reconciliate with the actual cash a company use or receive from its operating activities. And to do that, it adjusts the net income for any non-cash items that affect the income statement, but items that affect the income statement but don't involve any cash transaction. For example, stock-based auctions or stock-based compensations. Companies provide awards to employees or issue stock auctions. They have value, but there is no cash involved. Or depreciation or amortization. And adjust and what's the other? And adjust any cash. And adjust any cash, right? And adjust any cash that was used. Okay. And adjust any cash. And adjust any cash that was used. And adjust any cash that was used and adjust any cash that was used or provided by other operating assets and liabilities. Again, remember, the whole point of this cash flows or this operating cash flow here, something like this. The whole point of operating cash flow is to analyze the net income from income statements and reconciliate with the actual cash that a company receive or use in its operating activities. Okay, this to verb is something critical here. Great. Okay. Okay. Makes sense. Makes sense. Makes a lot of sense. Hmm. Okay. Makes a lot of sense. Yeah, makes a lot of sense. Okay. Hmm. All right. Okay. Cool. Cool. Next. So example of this is exactly. So after all, cash flow statement report the company inflow and outflow of cash. This is something important because company needs to have cash on hand to pay its expense or purchase assets. While the income statement can tell you whether a company make a profit, cash flow statement can tell you whether a company generate cash. And it does that by showing the change over time while reusing the income statement and balance sheet data. So the bottom line of the cash flow statement, it shows the cash or the net increase or decrease in cash for that period. And typically, this statement is divided in three main parts. You have this is divided in three main types. Well, this is divided in three parts, and each part review the cash flow from one of these three activities: operating, investing, and financing. Exactly. And the first part of the cash flow statement analyze the net income from the income statement and reconciliate with the actual cash that a company received from or using its operating activities. And to do this, it adjusts the net income from the income statement, the net earnings, with any non-cash items that affect the income statement, but there is no any cash transactions such as stock-based compensation or depreciation and amortization, and adjust uh, cash, yeah, and adjust cash use, okay, and adjust cash use, and adjust for any cash, and adjust for any cash that was, yeah, and adjust for any cash that was used or provide, okay, and adjust any cash that was used or provide by other operating assets and liabilities. So for example, other operating assets and liabilities is, for example, change in working capital, other non-cash items. Mhm. Okay, okay. Uh, okay, and then I look at the investing activities. Okay, so this is the first part of the operating activities. This is the first part of the cash statement, cash flow statement, okay, of operating activities. Okay, then you have is investing activities. The second part of the cash flow statement show the cash flow from all of its investing activities, which generally include purchase of sale of long-term assets such as property, plant, and equipment, as well as investment securities. So the investing activities is quite more simple than the operating activities, okay? Because investing activity is the second part of the cash flow statement, okay? And it shows the cash flow for all investing activities, which generally include purchase of sales of long-term assets, which generally include the purchase of sales, which generally include purchase or sales of long-term assets such as property, plant, and equipment. An example of this is plant equipment, property, plant, and equipment. Equipment like my laptop, my keyboard, my mouse, my mobile, that might be part of that. Okay. Including in purchase of sale of long-term assets, such as property, plant, and equipment. So for example, when you purchase a laptop and it is peripheral, right? For example, keyboard, mouse, or if you when you purchase a mobile, yeah, it do that as well. Plant and equipment. Okay. As well as investment securities. This is another purchase as well. Again, this investing activity show the cash flow from all invested activities, which generally include purchase or sale of long-term assets, such as property, plant, equipment, as well as investment security. And when you talk about security, the term refers to a financial instrument that is fungible, that holds some monetary value, and they can typically either depend on how it entitled the owner to a part of the company, usually called stocks, or to a principal and interest, usually called bonds. Okay. So if a company buy a piece of machinery, for example, the cash flow statements, okay, reflect negative. We reflect this activity as a cash flow from investing activities because it used cash. Exactly. This is a cash outflow. If the company decide to sell off some investment from an investment portfolio, the proceeds from sales will show as cash inflow from investing activity because it provides cash. Okay. And lastly but not least, the financing activities. The third part of cash flow statement show the cash flow from all financial activities. Yeah, from all financing activities. Typical source of cash flow include cash raised by selling stock and bonds or borrowing from banks. Exactly, but financing activities. Likewise, paying back a bank loan will show up as paying back a bank loan will show up as use of cash flow. Mm, 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 mm. So investing activities here. Okay, so investing activities involve is the second part of the cash flow statement, uh, in which generally involves the purchase of sale of long-term items or assets, such as property, plant, and equipment. So, for example, purchase a laptop. Uh, it is a cash outflow. So, if a company buys a piece of machinery, cash flow statements will reflect this activity as cash outflow from investing activities because it used cash. If the company decides to sell off some investment on their investment portfolio, the proceeds from sales will show up as cash inflow from investing activities because it provides cash. And financing activity show cash flow from all financial activities, typical such as cash flow include cash raised by selling stocks and bonds. Okay, cash raised by selling stock, cash raised by selling stocks and bonds or borrowing from banks. Cash raised, you know, cash raised by selling stocks and bonds or borrowing from bank. Likewise, paying a bank, likewise, this is a cash inflow. Okay, cash raised by selling stocks and bonds or borrowing from bank. Likewise, paying back a bank loan will show up as use of cash flow. Cash flow, cash outflow. Okay, okay. So that'll be all for this video. Take care. Bye bye.